All right, everybody, welcome back for another deep dive.
Into some more fascinating financial stuff.
Yeah.
Today we are tackling banking.
The fundamental.
Basics, yes.
Yeah.
We're looking at the different types of accounts.
We're looking at how to hopefully make your money work a little bit harder for you.
Yes.
And of course,
We're looking at all the ways to dodge those annoying, pesky fees.
gotta avoid those fees, right?
Oh, absolutely.
Make your money work for you, not the other way around.
Yeah, exactly.
So I was going through the material that you sent over.
And there's a lot of talk about this constant sort of cycle.
Of deposits and loans and interest.
Yeah.
Can you kind of break down how that all works?
Sure. So it's really the foundation of how banks operate.
Okay.
They're taking in deposits from customers like you and me.
And then they're using a portion of those deposits to make loans to other customers.
And the interest that they earn on those loans
Right.
helps to pay the interest on the deposits and obviously,
Helps with their bottom line as well.
Okay, so that makes sense.
But like as a regular person, why should I care about all that?
Like, I just want to know that my money is safe
Sure.
and that, maybe it can grow a little bit while it's sitting there.
Right. And so that's the important thing to understand is that,
The FDIC insures your deposits up to $250,000. So that can give you peace of mind knowing that even if something happens to the bank,
oh, okay.
your money is safe.
So the FDIC insurance,
That's a big deal.
it's huge. Yep.
Okay.
Especially in this day and age.
So it's like a safety net.
It is, exactly.
So if, like, something crazy were to happen,
Yeah.
my money's not just gone.
Right. You're protected.
Okay, that's good to know.
Yeah. You don't have to store it under your mattress anymore.
Thankfully not.
Right.
Those days are over.
Exactly.
But it feels like now more than ever.
Especially with everything being online.
It's important to understand these different types of accounts.
It is, absolutely.
And you mentioned wanting to kind of dive into that. So, like, checking versus savings.
Checking and savings, those are the two big ones.
They're the essentials.
Okay.
So checking accounts.
Those are, that's like the everyday hero of our finances, right?
They are. They're the workhorse.
Yeah, exactly.
Pay your bills.
Yeah.
Grab your coffee.
Online shopping sprees, all that fun stuff.
Easy access. That's what they're designed for.
You need to make transactions. That's what checking accounts are for.
Okay, convenient for sure.
But one thing I noticed in the material is that they don't always offer the best interest rates.
They do not.
Okay.
Typically very low interest, if any at all.
Which is a bummer.
Why is that?
Well, it goes back to that idea of the bank needing to make money, too.
So they had to balance paying you interest
Right.
with making loans attractive to borrowers.
Right.
And lower interest rates on loans means more people are likely to borrow.
So it's kind of a balancing act for them.
So they're trying to find that sweet spot.
Exactly.
Okay.
Now, when it comes to actually growing your money,
Okay.
that's where savings accounts come in.
All right. So that's where my money can do a little more than just sit there.
Exactly. They're designed for saving and earning interest.
But I remember reading...
Make, like, limits on withdrawals?
Right. And that's a key difference between checking and savings.
Okay.
Those withdrawal limits exist because the banks are still using those funds for loans and other activities.
Makes sense.
So they need to make sure they have enough liquidity to operate smoothly.
So it's a balancing act for them, too.
It is, absolutely.
Okay, got it.
But higher interest is obviously a good thing.
Always a good thing. And speaking of higher interest, we were talking about money market account.
MMAs.
Yeah.
MMAs, yeah.
So those are kind of interesting, right?
Yeah, they try to offer the best of both worlds.
So like a hybrid.
Exactly, a hybrid account.
Yeah.
You get a higher interest rate than a typical savings account,
Okay.
often comparable to what some MMAs offer.
Plus, you might even get check writing privileges or a debit card with it.
Oh, that's cool. Which makes them more flexible than a regular savings account.
So you're not totally locked out of your money if you need it.
Exactly.
Andy.
But the material also mentioned certificates of deposit.
CDs?
CDs, yeah, they seem a bit more, I don't know.
Intense?
They can be, especially if you're not familiar with them.
Okay.
They offer the potential for even higher returns than MMAs.
But there's a trade-off.
What's the catch?
You commit your funds for a predetermined period, and that's where they get their power.
So it's like locking in an interest rate
Exactly.
for a set amount of time.
Yeah.
If you withdraw your money before this CD matures,
Right.
you'll usually get hit with a penalty.
Oh, okay.
So it's designed to discourage early withdrawals.
Right.
And ensures that the bank has those funds available.
It's like a promise to your money.
Exactly.
You're letting it sit and grow.
Yeah.
Let's be real, though.
No one likes hidden fees.
Not like that.
Eating away at their cash.
And there was a whole section on dodging those fees.
Absolutely. Got to avoid those fees.
Yeah. What are some of your top tips?
Well, a classic example is the monthly maintenance fee.
Oh,
So annoying, right?
like paying rent on your own money.
Exactly.
How do we tackle that?
The easiest way, setting up direct deposit.
Okay, makes sense.
A lot of banks will waive that fee if you have your paycheck.
Or other recurring deposits going straight into your account.
So they see that money coming in.
Likely.
They're like, all right, we'll waive the fee. You're good.
Exactly, you're a VIP customer.
Exactly.
Another common tactic is maintaining a minimum balance.
Okay.
It's a way of signaling to the bank that you're committed and you have a certain level of funds consistently in your account.
So it's like a little financial reassurance.
Precisely.
Okay.
Now, switching gears to another pain point, ATM fees.
The worst.
We've all been there, right?
Desperately need cash. Only ATM in sight charges like $5.
It's like, come on.
I know. It's the worst.
So how do we avoid that aside from carrying around wads of cash?
Well, the easiest thing is to stick to your bank's ATMs.
Right.
Whenever possible.
Find those friendly ATMs.
Yes.
Okay.
A lot of banks have pretty extensive ATM networks these days.
Right.
So you shouldn't have to go too far out of your way.
But let's be real, sometimes you're in a bind.
And that out-of-network ATM is like right there.
Sure.
What do you do then?
Well, it's worth checking if your bank offers any ATM fee reimbursements.
Oh, okay.
Some banks have agreements with other ATM networks.
Or they might reimburse us a certain number of out-of-network ATM fees per month.
As part of their premium account, so it's worth checking into.
Good to know. Good to know.
All right, so we've talked about the accounts. We've talked about dodging those fees.
But how do you actually choose the right bank for you?
Right.
Because it feels like there are so many options out there.
There are a lot.
It can be really overwhelming.
It can.
So how do we even begin to narrow it down?
Well, it's a bit like finding the right pair of shoes.
Okay.
You wouldn't wear hiking boots to a gala, would you? No, so it's about matching the bank's services and features to your specific needs and your financial goals.
Okay, so what are some of the things that we should be considering?
Well, first, think about your banking style.
Okay.
Are you comfortable with online-only banking?
Or do you value having a physical branch that you can go to?
Because some people still like that face-to-face.
Oh, absolutely.
It feels more personal. Sure. And it goes beyond that, you know?
Okay.
Do you need a bank that specializes in small business loans?
Or are you more focused on finding the best interest rates for your savings?
Right, because not all banks are created equal.
They are not.
When it comes to those kinds of things.
No, they each have their own strengths and weaknesses.
Okay.
So while you're doing your research,
pay close attention to those interest rates, especially for savings accounts and CDs.
Okay.
Even a small difference in percentage points can make a big difference over time.
I mean, it's the magic of compounding, right?
Exactly.
It's slow and steady growth.
It really adds up.
It really does.
Over time.
Okay.
And it all ties back to being financially aware and proactive.
Right.
You know, even setting up those automatic transfers to your savings account can make a huge difference.
It's like paying yourself first.
Exactly.
Automation is great.
It is.
Makes the thinking out of it.
Exactly. Consistency is key when it comes to building a solid financial foundation.
I like it.
Yeah, it really is amazing how much those small amounts can add up.
But it's so easy to forget about.
It is.
That's why I like the automation part.
You just set it and forget it.
Right. You don't even have to think about it.
Exactly.
It just happens.
Yeah. Okay.
So we've covered a lot of ground here.
We have, yeah.
Different accounts.
Strategies to avoid fees, and even how to choose the right bank.
Yeah. And I really like what you said about finding the bank that fits your own personal style. Like,
it's so important.
It is.
Because it's not one size fits all.
No.
Everyone's got their own
needs and their own preferences.
Yeah, exactly.
So you got to find what works best for you.
And that's, I think, what I love about these deep dives.
Is just having that knowledge.
Yeah.
It makes you feel more empowered.
It does. Knowledge is power.
Yes.
Especially when it comes to your money.
Right. Exactly.
So you can make those smart decisions.
And, you know, you don't have to become a financial expert overnight.
Just start with small steps.
Okay.
Stay curious and keep learning.
I love that, little by little.
Exactly.
You know, those little steps make a big difference.
They really do.
Awesome. Well, on that note,
I think we've covered a lot today on banking basics.
We did.
So until next time.
Happy banking, everybody.
Happy banking.